Hi, my name is Hudgins and I'm a principal with New Hope Benefits and Consulting. Today I'm going to explain to you how high deductible health plans work with health savings accounts. I have found myself over the last 5 years on a daily basis having to explain how these plans work. So I thought I would just video it in my own terms to help you try to understand how these high deductible plans and HSA plans work, because we're seeing a lot more emphasis on these health savings accounts with our new administration. So the first piece that's important to understand is we have something that's called health insurance. Health insurance allows us to go see a doctor, get prescriptions, have surgeries, go to mental health, urgent care centers, so on and so forth. It's absolutely essential. One of the questions I do like to ask is, who likes to pay their car insurance? Are you raising your hand? Nobody likes to pay their car insurance because we don't see anything tangible from it. The difference is with health insurance, we do actually see something tangible for it, especially when we have to go to the doctor. But many people don't want to pay a lot of money for something they may or may not necessarily use. It's kind of like our car insurance. When things get tough, we call our insurance company, we raise the deductible, and the premium comes down. The same thing works with our health insurance. The higher the deductible, the lower the premium. So what many people have chosen to do as a response to the rising cost of healthcare is to elect these higher deductible plans so that they're paying less money in premium. The way that these high deductible plans work is, in order for you to have something called a health savings account, and we'll get into that in a minute, you need to have something that's called a high deductible, and it has to be a qualified high deductible plan. What the qualified high deductible plan means is that you are going to be responsible for the full deductible before any co-payments, co-insurance, or any other kind of payment comes with going to see a doctor or getting a prescription. The other term that's important to know is your out-of-pocket maximum. The out-of-pocket maximum is what you are going to pay in any given year up to a dollar amount, and once you reach that dollar amount, you won't pay anything else for the remainder of that policy year or that plan year. So the way our health insurance works with a deductible, regardless of whether you're in a qualified plan or not, is if you go to the hospital, okay, let's say you have a surgery, okay, and that surgery costs you $10,000. What's going to happen is the hospital is going to go ahead and file a claim to your insurance company, your health insurance company, and the health insurance company is going to come back to that hospital and say, no, you can't charge $10,000 for that surgery. You've agreed to charge maybe $5,000 for that surgery, okay? So this is the amount that you actually become responsible for, subject to your deductible, and in most cases, also included in your out-of-pocket maximum. Now, we see that our deductible is $3,000. So $3,000 from this charge is going to go towards your deductible, leaving a $2,000 balance, okay? Once you have achieved that deductible, maybe hospitalization, maybe that costs you 20% of the charges remaining. So in this case, you would then be responsible for only $400. So regardless of whether you're in a qualified plan or not, if you receive some kind of surgery, this is typical of what will happen. If you're looking at, let's say, $3,400 of out-of-pocket medical expenses, where does that money come from? For most Americans, it's coming out of their checking account, the account that holds all of the funds that you have earned throughout your hard working days. But it's also the same funds that are paying your mortgage, keeping the lights on, as well as possibly saving up for who knows what, a new car. $3,400 is going to hurt one way or another. So the benefit of being in a qualified high deductible plan is what we call a health savings account component. And when you're in that qualified plan, it allows you to add on this component. But when I say health savings account or HSA, all I want you to think about is bank account. All it is a separate bank account that you can use pre-tax dollars to pay for your out-of-pocket medical expenses. So if you're in a group plan and you have access to a high deductible plan with a health savings account, chances are your employer is going to be taking those funds on a pre-tax basis from your payroll and depositing into your health savings account. If you're an individual, obviously you're going to have to fund this health savings account on your own with post-tax dollars, But when you go to file your taxes at the end of the year, you're just going to account for what you have funded your health savings account for that year and write it off right on page 1 of your taxes. Okay, so who does these high deductible plans work for, or these qualified high deductible plans? Who do they work for? Well, they work for the super healthy, okay? Because the super healthy don't want to pay a lot of money for something they may or may not necessarily use. They want to pay the least amount of possible, but they want to have something there in case something happens. On the other hand, you have the super sick. You could have people with liver transplants, diabetes, heart conditions, and it doesn't matter what kind of plan they're on, they are going to hit this out-of-pocket maximum regardless. I had a friend once who was on a liver transplant list, and the minute he walks into his clinic, receives his care and his prescriptions, he hit that out-of-pocket maximum. It didn't matter if he was on a $500 deductible plan or a $3,000 deductible plan. The difference was he was on this high deductible plan, and he was able to use health savings account pre-tax dollars to pay for what he inevitably was going to pay for no matter what. One of the things that you may want to look at if you're ever considering using a high deductible plan with a health savings account component is the difference between the premium. I have seen it where premium differences are so spread out that people could almost fund, or individuals could almost fund their health savings account up to the IRS maximums. So, health savings accounts, high deductible plans, they may or may not necessarily be for you and your business. But one of the things I do love doing is creating a unique strategy for individuals as well as businesses to ensure that you have a sustainable benefit program for you or for your employees. So I would invite you to come and visit my website, www.newhopebenefits.net, or give us a call so that we can look at your benefit plans in a no-pressure environment and just make sure that you have the right strategy set up for you, your employees, and your families.